If you could pick one stock to buy for the next decade, what one would it be? A lot of you have been asking us that question. Well, today we have answers. We spoke with 13 really smart investors to get their pick for the next 10 years. And in this video, we'll walk you through that exclusive list of 13 stocks. But first, let's explain how this list came together to kick off this week's Ticker Take.
It's Ticker Take, you know.
Okay, John, people have been asking for a video like this for a long time.
They have, and thank you for asking. We are very happy that we can present this video to you.
But we also should be clear, this was no easy assignment.
Well, when we speak to market professionals, and we've been talking to them for 25 years, most of the time they do not provide a 10-year framework. So kudos to this group to share their confidence and insight with some decade-long ideas.
And at the end of the day, I think it's what people really want to know.
Well, we do those videos where we talk about $10,000 invested a decade ago and what it's worth today. And I always get asked, what would you invest in for the next decade? So absolutely, people want to know.
Yeah, and I think with the turbulence of the market, people want to feel confident in their investing choices right now.
Absolutely. And this is a savvy group of investors who have been through a lot of ups and downs and are able to make confident decisions about long-term investments as a result of their expertise.
All right, well, should we get to the list?
We should. Just a friendly reminder, these are these investor opinions, not our own. And this is not financial advice.
In alphabetical order, stock number 1, Amazon.
This pick comes from Allan Small of the Allan Small Financial Group with IA Private Wealth. Now, we've done a lot of videos on Amazon, which is one of Wall Street's favorite stocks. Here's why Allan made this his pick for the next decade. First off, it's a diversified business. Everything from groceries and pharma to AI and the cloud to TV and movies to live sports. Allan thinks that will help Amazon to do well in good times and bad. Number 2, strong management. And number 3, a reasonable valuation despite being a big technology company based on the company's projected earnings growth.
Stock number 2, BHP.
Yeah, this one comes from David Dietze of Dietze Wealth Management Group. He made a strong case for betting long-term on this mining giant. Have a listen.
Hi, BHP. This is a global leader in mining of commodities, with a particular focus in copper and iron ore. Analysts project that the use of copper for electrification and for electric vehicles is going to continue to increase over the next 10 to 15 years. Meanwhile, iron ore use is down. Both of these things are out of favor due to tariff concerns and China's slowness, but we think that's going to rebound. Meanwhile, enjoy the plus 5% dividend and just 12 times earnings with the global leader.
Stock number 3, Canadian Natural Resources.
Yeah, this was interesting. This stock came up with 2 really smart investors who we spoke to for this video. Eric Nuttal of Ninepoint Partners and Ryan Bushell of Newhaven Asset Management. Let's hear from Ryan first.
Hi, it's Ryan Bushell here from Newhaven Asset Management. A company we really like for the long term is Canadian Natural Resources. We think it's one of the best managed companies anywhere in the world in any industry, and with an 11% free cash flow yield, a 5.5% dividend yield, 25 straight years of dividend increases with no cuts, and a stable production profile relative to higher cost or higher decline oil and production assets. We think this will be a steady compounder in portfolios for years to come.
Now, this was also a top pick for the noted energy investor, Eric Nuttal. So there are 2 really smart investors who are betting long-term on Canadian Natural Resources.
Stock number 4, Celebrite.
Yeah, this pick comes from Ryan Modesto of I2I Capital Management. Here's Ryan's take.
We like Celebrite, ticker CLBT. The company does digital investigation software sold to government agencies across the world. And they're really essentially like one of two companies that do this, that provide this type of software. It's a high margin business. They have sticky revenues. They're growing the top line in the 20% range fairly consistently. And we think they're really just in the early innings of the total opportunity that's ahead of them. So recently they've seen a bit of a pullback due to the general market drawdown, but also due to a CEO transition that is orderly, but taking a bit longer than markets would like. So I think that's kind of weighing on the shares a little bit. And then also the budget cuts going on in the US right now have raised investor fears. But overall, we view these as kind of short-term issues that the company will be able to get through, and we think there's a lot of opportunity at these levels now.
Stock number 5, Chartwell Retirement Residences.
This one comes from noted real estate investor Dennis Mitchell, who has been tracking the growth in demand for seniors housing. Here's Dennis Mitchell's take.
Chartwell Seniors Housing REIT benefits from the aging of the population in North America. So Chartwell benefits from the fact that over the next 10 years, we will need about 200,000 more seniors housing units in this country alone. Against that, in the last decade, we've only developed 73,000 seniors housing units. So as a result, Chartwell benefits from rising demand, high occupancies, strong pricing power that should continue to generate strong cash flow per unit growth over the next decade.
Stock number 6, Coca-Cola.
This one comes from our old friend JJ Kinahan of IG North America. Here's JJ's perspective.
One of the most interesting stocks I find right now is Coca-Cola KO. Why do I say that? In times of volatility, I like to look for low value stocks. Coca-Cola fills both of those buckets, and don't forget the stock is up 15% so far this year in a down market.
Stock number 7, Evolution Gaming.
Yeah, this company's technology is used in the online casino industry. Evolution is actually a Swedish listed company, and this pick comes from Jason Del Vicario of Hillside Wealth Management at IA Private Wealth. Now, Jason wanted to stress that when he thinks about long-term investments, he's thinking about it in terms of decades, not months or years, and that high-quality companies are those with high returns on invested capital. They have, to a certain extent, moats around their business, and they still have ties to their founders. Here's Jason's perspective on Evolution Gaming.
We like Evolution Gaming because it is founder-run, founder-owned, has the dominant market share leading position in a growing space, has generated consistently high returns on invested capital, and allocated excess capital efficiently through a growing dividend and share buybacks. Available at 12 times earnings, we think that the current valuation is attractive.
Stock number 8, Lumen Group.
Yeah, this one comes from noted longtime investor Andrew McCreath of Forge First Asset Management. Here's Andrew's take.
Our funds at Forge First Asset Management have owned shares in the Lumen Group ever since the company was spun out of Constellation Software in early 2023. We believe this company has a proven business model at purchasing and managing vertical market software companies, and expect the company to continue to be able to exhibit above average rates of growth in earnings and free cash flow.
Stock number 9, MasterCard.
Well, MasterCard really delivered for investors over the previous decade, and Greg Taylor of Purpose Investments thinks that could be true for the next decade as well. Here's Greg's take.
Can't go wrong with MasterCard. It's high margin, scalable, huge barriers to entry, and a capital light business. That's exactly what you want to look for in a company that's going to be around for the next 10 years. And this is something you can just buy and sleep at night, and the business model is going to be there and very profitable.
Stock number 10, Microsoft.
Certainly one of the most popular stocks on Wall Street. This name comes from Bruce Campbell of StoneCastle Investment Management. Here's Bruce's take.
I think Microsoft for the next 10 years, they really have everything covered from a technology aspect. They're in personal computing, they're in business computing, they're in the cloud, they're in gaming, and of course they're in AI as well.
Stock number 11, NVIDIA.
Yep, the AI darling is the top pick for the next decade from the noted tech analyst Dan Ives of Wedbush Securities. Here's Dan's take.
NVIDIA is the stock to own in the next decade. When it comes to physical AI, autonomous, robotics, there's only one chip in the world that's fueling this AI revolution, it's NVIDIA. I continue to believe 4 trillion, potentially 5 trillion is where this goes. Clearly going through headwinds today, but that continues to be, if there's a meme you own for the next decade, it's NVIDIA.
Stock number 12, Oracle.
The software juggernaut is the top pick of our good friend Cory Johnson, longtime investor, longtime tech watcher. Now, Cory was very specific that this is a pick for his portfolio. He says for other investors, they've got to know what their own time horizons look like. That being said, here's Cory's take on Oracle.
All right, what stocks should you own for the next 10 years? Well, I don't know you. How would I know what you need for the next 10 years? Are you going to retire? Are you going to go to college? Maybe you're going to go get divorced and buy a red car without a roof and get a hot blonde. I strongly suggest that. But look, I don't know you. I know me. I am hoping that some of my investments that I'm in right now will stay the same for the next 10 years because they continue to deliver that I want. One of those is Oracle. I'm invested in Oracle because the company has consistently stayed at the leading edge of technology. It's a necessary product for almost any company that uses it. Companies don't go out and get rid of their databases if they've got that going and it's working for them. So it has really kind of a moat, a technological moat, and yet is on the cutting edge of what's happening in AI right now. So as long as they continue to deliver cutting edge AI, growing out very profitably, and throwing off tons of cash flow. I mean, last year cash flow was up 35% in a year, free cash flow up 35% on a year-over-year basis. Free cash flow, the ultimate measure of how good a business is. If this thing's throwing off a lot of free cash flow, innovating at the cutting edge, necessary as a moat, it's necessity as a moat to keep the businesses that they've got. That's why I like Oracle here. This is advice for you. This is for me. As long as that story stays the same, I'm staying in Oracle.
And stock number 13, Propel Holdings.
Well, this one comes from Bruce Campbell, who we heard from earlier on Microsoft, but Bruce gave it some extra thought, which we appreciate, and he also likes the prospects for Propel. Here's why.
For the next 10 years, I like Propel. They're a subprime lender that's using technology in the form of AI to be more efficient with their lending practices. The company's been growing at 30% per year and trades at a really attractive multiple.
All right, that is our exclusive list of investor picks for the next decade. Thanks to our great group of investors for sharing their picks. If you want to learn about any of those investors, we put some links in the description below. Now, a friendly reminder, it's always helpful to talk to a professional when you're trying to figure out your long-term investing goals. Thanks to Caroline Leslie, be sure to check out her socials. Thanks to Market Lab newsletter for our graphics. Be sure to check out the Market Lab newsletter. And finally, we work hard to bring you new investing videos every week, so be sure to subscribe. And as a bonus, you won't miss our next investing video. See you next time.